Good evening, friends, and thanks a lot for joining me on YouTube Live. I'll just post this on my Telegram and YouTube, Twitter page, and then we can start. Just give me 1 second. So as I do that, I'm just downloading the file for the FI data as well. The cash data is not that bad actually but it tells you that at higher level FIs are sellers, right? So that's why, and even minor amount of selling brings market down quite a bit from the highest point of the day. So YouTube live. Okay. So now, the topic that we have chosen today is basically uh, what kind of stocks do well in rising rate environment, and in general, how you should approach market in rising rate environment, right? So I think in that, for a background, I would suggest all of you to watch the interview that we had with Saurabh Mukherjee today, and I think that is the crux. Uh, for starters, only look at cash generators. Uh, it's not surprising that stocks like Zomato, are falling the most in this market because the ones which are making losses normally will not survive in rising rate environment. So the companies that will survive and thrive are the ones which have absolutely nothing to do in terms of uh, interest rates going up because they generate so much cash that they don't care. In fact, they keep putting the cash back in the market. Uh, Rajesh, thank you so much. Actually, all of you, thank you so much. Our gut feeling yesterday is mm, is something that is something that we it worked out, and obviously it means that at the end of the day, the market has to be looked at in a complete sort of differential from that day's trading action. This is a very treacherous market, guys. So what I don't want you to do is to go into this market with preconceived notion. You have to be absolutely there with the open mind, and make no mistake about it, today's move, and especially if you can say today was expiry, but the US market is down. If tomorrow you break yesterday's low, make no mistake, that will confirm that we are in some kind of a near-term bear market. We are in a structural bull market, but within that we are in a cyclical bear market. And I think the market made a peak in October, and since October we are now in May. So October to December and Jan to April, we've passed a full 7 months since hitting that all-time high. So time-wise, anyway, you have lost money. Price-wise, some of you would have lost money, and some of you may still have not lost money. Why is Apollo Hospitals falling? Akash is asking. Look, Akash, at the end of the day, uh, you know expensive stocks fall, and this is one trend that I have always told you. If you observe, stocks that enter the nifty normally decline, and stocks that exit the nifty normally rally. Why is that? Because you have a habit, you have a tendency of, why will a stock enter nifty, right? Because it will do better than the worst performing nifty stock, and far better, so it will climb up the ladder. If any of you watches football and English Premier League, you would notice that you would know, right, that at the end of the season, that bottom three teams in the Premier League are relegated to championship, and the top three teams from championship are promoted to to Premier League. But as happens, mostly the teams that get promoted struggle, and while the teams that get relegated to the second division, because they still have the experience of playing the top flight, they do well. The same is the case with the stocks that enter the nifty, because they have performed so well leading up until that they become so expensive. And Apollo, in any case, is a very expensive stock, so that's why Apollo is falling. Anyway, I just digress from the topic. The topic that we were discussing is what kind of stocks do well. So the number one criteria is cash flows. So just go out and look at stocks where they've generated a lot of cash. and they keep generating cash. Stocks which are like cash machine. Every quarter, every year, they keep generating cash. They keep generating cash. They make so much money that they really don't need to take any money from outside. I'll just give you an example. Names like Pidilite, names like Asian Paints. Some of the stocks that I've covered in off the charts. What is common among all of them? They don't have debt. They just are cash generating machines. So first things first, in a rising rate environment, clean out companies with debt. Now, keep in mind, there are some companies for which debt is fodder, like Bajaj Finance, right? So don't go looking into NBFCs with no debt. That's not how it works. In rest of the businesses, look for companies with zero debt or low debt, and look for companies which generate cash. I think you would eliminate a lot of duds by doing that. And after that, you look at companies which have pricing power, which have monopoly or duopoly, or at least a strong number one or number two player in a five or six player market. I think if you narrow down to these stocks, you make a lot of money. Now, one more space which generates a lot of cash is commodities, but in that the problem is that you don't know how the cycle is going to pan out, or where the cycle is going to pan out. So that's why you perhaps commodities is not going to work. One more thing which is happening in this market, if you noticed, is very subtly that a lot of these stocks which were commanding very fancy valuations have started to lose. I think for those of you, hand on heart, you would know that you must be regretting your decisions now of staying for too long in specialty chemicals, for example, staying for too long in mid cap IT, for example. If you have been in mid cap IT and specialty chemicals for too long, you would notice that your portfolio has taken a big hit. And that's because these stocks, too much money was being pumped into these stocks because they were showing growth. But now there's a bit of a valuation reset which is on. Now I'll start taking some questions. Ravi Shankar is asking, has the market turned bearish? I think this has been a bit of a bearish market for some time now, for last 3 or 4 months. And the best example of that is that it's become a sell on rally market. And I think clearly the moment it rejected 16,950 today, and I'm answering Rajat your question as well. Remember, look at my trading setup in the morning. I made a point that the market is primed for major short covering, and provided it takes out 16,950. Just look at what the market's high was today. Nifty's high, I think it was 16,945. So that's why, look, guys, it's there's an importance in studying the turning points of the market. Why was 16,950 important? Because yesterday the market's waterfall decline started from 16,950. So those who would have sold at 16,950 yesterday, they are the strong shorts, right? Those who sold yesterday after the market had collapsed, they were weak shorts. They just covered their position in the morning and the market went up. Always find out who shorted where. The strong short, a strong trader shorted at 16,950 yesterday, or say 16,920, 900, and he would put a stop loss of 1,500 points. So that's why 16,950, 960 was important. If this strong short had to cover, the market would have gone up another 200 points. But that didn't happen. So you have to respect that. The market turned, you should have noticed that and immediately turn. Uh, Abhishek is asking if the market was in 16,850 to 17,250 and the market breaks the range. Can we expect 400 more points down soon? I think we can. I think it's entirely possible now that the market does a retest of the recent low 15,800, if my memory serves me right, and to see if there's some kind of a double bottom there or not. Sambuddha, thank you so much for the kind words. Really appreciate. Uh, Red for Red Days. No, this is just my evening t-shirt, so that's why. Rajan, I would try to be regular now. My favorite team in IPL, I don't watch IPL, Jay, but if I have to pick one team, obviously it will be Mumbai Indians, my home team, right? Uh, Amchi Mumbai is what I would say. Banks results were good, but not performing as per results. Vaibhav, this has been the other trend in this market, and I think that's what I keep telling a lot of people. A market's texture is best known when stocks react to news. And when stocks go up on bad news, it's bull market. When stocks fall on good news, it's bear market. Simple as that. So If you are telling yourself that the result was good but the stock was down, that means it's a bear market. Again, let me choose my words very carefully. Bear markets in India as a concept do not last for too long, because we're a growing demography. So obviously, the economy does not stay low for too long. But there are patches of bear market. So what we have right now is a patch of a bear market. And the way the advanced decline moves, and the way some of the individual stocks move tells you that. Rasesh, thank you so much. I love interacting with all of you. So thank you so much. Look, Vignesh, on Solara, I think I had made my view very clear when the stock was 4x or 5x, that with these kind of stocks in mid caps, once you start to make money, you just keep trading your stocks. Because look, there's no end to greed. A 400 rupee stock goes to 2000. At that point, if you don't say, okay, I'll book profit at 1800, it's not a blue chip, right? It's a mid cap. At the end of the day, it's a mid cap where the promoter quality has always been in question. But it gave you a nice, great run. Participate in that for all matter. But at the same time, if you are in the money, keep trading your stops. Look, stop losses do not work only in trading, they work in investment as well. And I think many times in YouTube live, I had made this point that if you got in at 300, 400, and you saw that right to 2000, in that case, put a stop loss at 1800. If not at 1800, 1600. At some point, you have to protect your profit as well. If you don't protect your profit, then what is the point in stock market? Look, at the end of the day, even HDFC Bank has fallen so much, right? Even Bajaj Finance can fall from its peak. So every stock and any stock can fall. You always, and that is one reason why I hesitate to comment on individual stocks, because what happens is that you get associated with a view on a stock, but views can change, and things change. As I keep saying, if you see the movie 21, variable changes, your view changes. Simple as that. Uh, can the Nifty touch 16,000, 16,300 as mentioned by Sudarshan and Mitesh? I think it can. I think yesterday's bar and today's bar clearly is not looking too good. And I think in the US, what you had was a relief rally, and today you have a bit of a reality check. So that is something that also is very important to notice. What about IT? I think IT made a good comeback, but it's not the bottom. Look, if I were to stick my neck out, I would stick my neck out and say that the CNX IT, the Nifty IT will break this month's lows, and it will correct at least another 10%, if not more. Infosys will go to 1400, if not more. Do consult your financial advisor, but uh, again, go back to my trading setup today. The point I made was that today you will see powerful short covering in IT, but learn to trade short squeezes. I think in a bearish phase, short squeezes are the best way to create fresh shorts. The ones which are weak stocks, just see when the short covering ends. The moment the short covering ends, you latch on, and you get a good trade for yourself. That's how you make money in a bearish phase. So no, absolutely not. The bottom is not there. On Jubilant Foodworks, I think on Jubilant Foodworks, they need to now get first a new CEO, and I think then only perhaps the market makes a bigger move, is what I would say, as far as that is concerned. So that's on Jubilant. On GMDC, I've not read it much, but I think the numbers have been quite good over the last 2 days. Midday update, okay, I'll try midday update as well. Are we coming at 14,000? Look, guys, let's take 500 points at a time. Let's not get ahead of ourselves. And nobody knows, like, you only an astrologer can predict, and even that perhaps will not be the right way to predict. Nifty stop loss for buyer, I think yesterday's low, Abhishek, sacrosanct, at least on a closing basis, is what I would say. Uh, if the market is oversold, look, again, that's one more point I keep saying. The market being overbought and oversold is a tactical call that works on a 1 or 2 day basis. But a market can stay overbought and oversold for a really long time. Okay, so that's why, just to say that the market is oversold and the market will rally, perhaps is not the way to look at things. Trading in cash Nifty B is advisable. Yeah, I mean, if you are Nifty ETF, you're asking basically. Nifty ETF is always a good product. I've always maintained that Nifty ETF and Junior Nifty ETF are always great products. You can keep doing SIPs, and every time the market falls 20%, you can put lump sum money in that. I've specified, Vishesh, all the sectors and kind of stocks that make money in rising rate environment. Perhaps you can replay this telecast, and you will come to know, right? Okay, thank you so much, everyone, and God bless you. We will, of course, now talk to you on Monday. Thank you so much for joining in, and good evening and good night.